Yo guys, welcome back to the channel. I just wanted to break down a couple of trades that we took in the community yesterday and also one that we missed that I should have taken, but I was actually away from my screens. Um, yeah, it was actually a really clean day yesterday in terms of strategy performance. But I was away from my screen, so I wasn't able to manage a trade, so I ended up taking a loss that should have been a win. But we'll get into all of that. So we'll first go over a GBP USD trade, which was my type 2 entry model, which, by the way, I share everything in my Discord, absolutely free. The link's in the description. As you can see here, this is the GU trade that I called yesterday, and we ran around about 7R. But I didn't set my take profit, so I ended up taking a loss. But some of the guys in there actually managed to capitalize on that move, but I was away from the screen, so it is what it is. We move on to the next one. So yeah, basically what we can see here is we've got a large run on liquidity here and a strong displacement to the upside. We then have a small pullback and another displacement. So a lot of people would potentially be looking somewhere around here to take an entry from. But this area did not interest me. I saw this area as sell side. Now you might be saying, why did you see this as sell side? It looks like clear market structure. In a conventional way, yes, I can understand why you may say that. But if we look at this a little bit closer, we have a strong run on liquidity, right? We take sell side liquidity here and we displace to the upside. Now, for me, I always want to see a structural run on liquidity mitigated via another structural run on liquidity. So if you see how clean this pushes, and when we pull back here, we don't run any more sell side liquidity into this leg here. So for me personally, this long I wouldn't take because we have no way to take sell side liquidity on this time frame back into the previous range. If this wick here, if this had popped up above here, this would then denote this low as like external sell side liquidity. So we would have gone high, low. So we would have taken buy side, taken sell side. So then you could look to take this trade and target buy side liquidity. But that's the reason why I would not look to trade off of this, is simply because it does not run sell side liquidity back into this previous range before the expansion. So for me, this is just generating sell side liquidity. And if you also look, we never truly mitigate this order block. We miss it by around about half a pip. So I was looking at this for my point of interest, and just to show you guys my trademark, it's also from the lower third of the larger range. Now this is my type 2 entry model or my type 2 trade model. I've got another one which is very similar, but there's a slight nuance difference. But yeah, you can see this is from the lower range, and it comes during London kill zone, which is 2 a.m. to 5 a.m. New York local time. So you can see price pushes in. We initially react a little bit and then we push in again. And actually, where did I tell the guys to buy? It was here, which was 515. And we had a 5 pip stop loss on this. So 515. We got in here and we had covered the low for around about 5 pip stop loss. And we should really have just been targeting 5R, which would have been like around here. I should have had a hard take profit set. You know, my edge is just 5R. We came back and we ran, you know, about 8R, 7.8R. Before then, obviously, the news hit. I was putting my daughter to sleep, so I didn't have my phone with me. And I ended up taking a loss. But luckily, some of the guys in there managed to capitalize on this trade. You know, it was running around about 8R. So if you didn't take anything off of that, it's not ideal. But yeah, it was a beautiful trade according to my strategy. Had I had my hard take profit set at 5R, we would have been +5. But yeah, beautiful trade example there. And then also we had a trade on EU, which is similar setup, but this came in New York kill zone. So let me just break this down. You see we have a break of structure here, and then we pull back. So we create this another small range, which I don't denote as a break of structure. Why? Same thing, doesn't run sell side liquidity back into previous range. So then when we pull back here and take sell side liquidity, we give another push up, and then we push back down, taking sell side again, and then eventually going on to break the high again, which would give us another structural range to play from. So this then gives us our another range, which there was actually an entry from here, but I didn't take it. And it's not valid according to my plan, but it's valid according to my buddy's plan who runs the Discord with me. But I won't go into that because it's not my trade. So if you come in the Discord, you can check his markup for that. And yeah, anyway, now we come into New York kill zone. And what we're looking at. So we've got a new structural range to play from. Let's play price on a little bit here, wait for the pullback. So we start pulling back, right? So we need to now draw our range on from range low to range high, denote our lower third of the range and find our order blocks. Now this is very, very simple. We literally just have one area here to look from. So in this instance, you could almost definitely just set a limit and cover the candle wicks, which will give you what, a 7 pip stop roughly, and target 5R, which in this case would be the high for only about 37 pips, give or take. Yeah, so that's one way to get in. And you can see we tap in during the news, and we give that lovely reaction to the swing high for a take profit. You see, very, very simple strategy. It's literally just run and sell side, displacement, break a structure, return back to lower 30% to a valid order block, and then take your entry. So yeah, we could have been +10 yesterday, but unfortunately I missed this, and I took a loss here, but it is what it is. That's the review. And today we actually missed a trade on New Zealand dollar. I was looking at sells. I wanted it to push up into a little bit higher, into this level here, but we just missed it. However, you can see that this candle engulfs this whole range. So, if we're being technical about it, that is the point of interest, as this whole candle engulfs the whole previous range. Yeah, but I missed this. But again, it's valid to my plan. So I could have then taken another short here when we had this engulfing, covered the high, 4.8 pips, a little bit small for me, call it 7, and targeted, something down here, 5R, which you would have just hit now. So yeah, a couple of beautiful trades there. I haven't been on the ball this week, to be honest. I've been juggling a lot of things. So my trading has suffered, but I've recognized that, I'm doing these reviews so that I can see how I can see what I've missed and how I should have performed. So yeah, but that's that. And yeah, I'll catch you guys in the next one.